Welcome back everybody, and in today's video we're going to be going over the volume profile tool, but not just any volume profile kind of video. This is going to be a nice in-depth one, and I'm going to show you how to use it most effectively, and also a big misconception about the volume profile tool. So let's jump on to a chart and let's get cracking. So here we are on the NQ chart, 15-minute chart. It's a candlestick chart. I'm going to turn off the footprint because it's not needed for this video, right? Now, the volume profile tool, there are many different ones you can use, okay? There's the session volume profile, which does, each session, and it shows you the volume profile. Or you can use the fixed range volume profile, okay? And it's in the sidebar on TradingView as well, right there, fixed range volume profile, or the anchored volume profile. I prefer to use the fixed range volume profile. And for this video, I'm gonna predominantly be using the fixed range volume profile, right? So I've already got it in my toolbar here. Now, there's a huge misconception about the volume profile tool. You need to understand with any tool you're about to use, you should always understand exactly what is it showing you, what is it tracking. And since the name of the tool is volume profile, people predominantly believe it tracks volume, which it does. Don't get me wrong, of course it tracks volume, but there's one metric it tracks more than volume, and that's time. Okay, so what do I mean by that? You see, it's very simple, right? If we take just this area of the chart, right? All this area, this whole kind of, block here, this whole push-up we had, right? Where do you think the largest amount of volume was traded? From here to, let's say, here. Now, most people will be like, well, I don't know, I don't have the volume, hard to tell. But I can tell you right away, the most amount of volume will be here. Okay, this will be the point of control, this area here, right? And the lowest amount of volume is a bit more difficult to kind of pick out, but I'm probably going to say this is the lowest volume node right here, probably around there. And the reason I'm making this presumption and this guess is because I'm looking at where in the chart did price spend the least amount of time and the most amount of time. Now here it spent the most amount of time, so therefore it would have accumulated the most volume, right? And where did price spend the least amount of time? Probably like here or maybe here. It's kind of hard to know exactly. So let's draw out the volume profile and see how accurate I was in my guess, okay? I'm going to draw it from here to here, and pretty much spot on. That's the lowest volume node right there, so I got that pretty spot on. Okay, and then the heaviest amount of volume is up in this region here, because that's where price spent predominantly the most amount of time, right? So the volume profile is actually more of a measurement of time rather than volume. And there is a tool that already does, just time, and that's called time price opportunity, TPO, or market profile. And the volume profile just adds obviously volume as well. But wherever the market's going to spend the most amount of time, or wherever it did spend the most amount of time, is generally going to be the high volume nodes, and where it spent very little amount of time is where there's going to be low volume nodes. So now knowing that volume profile is more a measurement or a metric of time, okay, how can we trade this? Well, first of all, high volume areas are probably not going to be the areas you really want to enter a trade, because that's generally where markets consolidate, right? They go sideways. You don't really want to enter in consolidation. You want to enter where price moves, okay? So you really want to be looking at lower volume nodes, okay? Like this area here is way more of interest, right, than, the point of control, or this area here, right? Just because this is where price didn't spend much time. And you can actually see just right away, if I zoom in here, you can actually see this low volume node. If I just draw a box around it, when we dip back in, price immediately rejected out of it. Didn't consolidate, didn't spend hours doing nothing. It immediately rejected out of it. And that's kind of what you want to enter. If you're going to enter a trade, right? If you want to go long here, you want it to go quick to your take profit, right? Or go quick to your stop loss. You don't want to wait around for ages while price just goes sideways. You either want to be correct quick or wrong quick, right? And I think that's fair for most traders. We rather get stopped out quick or get to our TP quick as well. So that's why low volume areas are actually where you really want to pay attention to as potential areas of trade. Now here's another little thing to keep in mind. This area was low volume because price didn't spend a lot of time there, right? But I can almost guarantee you that this area, okay, will have actually institutional activity, because the only reason price was able to shoot up so quick was most likely a large aggressive order was placed in the book, was placed in the market, you know, below it, in order to allow price to quickly gap through that area, okay? And that's why it's a dip in volume. You can see we got a bit more volume here, not a great amount, but bit of volume here, and then it dips down the volume, and then the volume increases as we start going up, right? So these kind of little areas where you have, you know, high volume above, low volume below, and then high volume again below is what I'm looking for on the chart when I'm doing volume profiles. So let me show you how I would draw out and how I would mark out my levels. So straight away, this would be a level I would mark out. Okay, I would do a volume profile from the top of a move, from the bottom if it's a bullish move, from the bottom of the move to the top, right? And when we retrace back into it, I will look for some kind of, and boom, I will look for some kind of rejection in that area, and there we had it, right? As we came back to this area, look how quickly price decided to move off. Now there's two ways, or there's two things that could happen, okay? When you mark out these areas, right? Price could either reject like it did here. It will come back. So, you know, price pushed up, it retraced back into that area, into that low volume node, and then shoot off again. So you can do a continuation trade. You can go long here. Or price will break through the low volume node very quickly, come back and retest from the other side, and then you want to short it for a continuation down. So there's only two ways you can trade it, okay? If, for example, we went long here, and we got stopped out very quickly because price just went through it. Okay, no big deal. Now I want to wait for price to get back into it where I can potentially short the market down. Okay, so either side, it doesn't really matter what happens, I'm catching a trade. Okay, and very, very rarely would you see price get to these low volume nodes and do nothing and just start consolidating. It can happen, but very, very rarely. Or price will just kind of go through up and down it like that and treat it with, you know, no respect at all. Again, very rare. Okay, so that's how I would mark out my charts, right? If I now just take another leg, right? So we had this kind of push up and then it stopped here and we started reversing. So let's do another volume profile from the bottom to basically the top. And I want you to pick out where these low volume nodes are, okay? So there's a few where there's higher volume above, low volume, and then higher volume below again. Now, there's a really obvious one here, but this is very high up in the range, okay? The lower down it is, or the further away for a retracement, the better, okay? Now, this is quite low, higher up in the range, so you can see right here, this is a perfect example, okay? What happened with price here? We touched into it, we rejected, but it couldn't really go much higher. We touched into it again, it rejected. And then when it eventually broke through, what did I say? You have to wait for it to come back on the other side, and then you'd have the continuation. And that's what we had here, right? So you could have traded multiple different trades just on that one little low volume node, right? You could have taken a couple of longs, potentially, right? And okay, if you're targeting the high again, you wouldn't have hit your target, but this is why order flow is so important, okay? And I'll get to in another video about the footprint, okay, and how I read the footprint. I wouldn't just enter long blindlessly because we've touched the low volume node. Once we get to that low volume node, I will switch over to the footprint and I want to see some kind of absorption, you know, buy pressure come in, something to indicate that this, you know, the market's going to go up, right? And naturally, if I'm in a trade, I am still looking at the order flow, right? I'm looking at what's going on. If I start seeing something, you know, occur in this area here, lots of sellers coming in and they're starting to push the market down and getting effective, I'll probably just get out and take my money, right? And say, that's fine. I'm not going to wait for it to go back to my break even or stop me out. I'd rather just cash in what we had now. And if it, starts deciding to want to reverse on the order flow again, I'm seeing buyers take over the market, I can jump back in again and continue that move up should I need to, right? So you want to be fluid with the market. But that's a video for another time, and explaining the footprint, right? Because you want to use both of them together, okay? So you could have had a trade there, you could have had another trade there, okay? Another one here, all right? Which also ultimately failed to go right to the, to the highs again, but definitely you would have left with some profit if you trade fluidly, right? And then you probably would have entered again, okay? And this time you would get stopped out, right? You can see how quick it will stop you out, and you're wrong. Just boom, 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 boom. All right, no big deal. I was wrong, right? Now, the next thing we want to do is we want to wait. Now that we've cleared this level, okay, we're only looking for shorts. We're trading below this low volume node now. We're only looking for shorts. We're not looking to buy anymore. We're just looking for shorts. So we wait for price to break through, which it did. Now it comes back on the other side, and now you want to short here, right? This is where you want to short. So you jump in for a short. And again, however you want to target, what your take profit will be, that's entirely up to you, okay? You can target wherever the hell you want, probably something to do with structure. Maybe you want to target, so maybe if I just remove the volume profile, maybe you want to target these highs that became that will become support. Maybe you want to target there, so jump in from here to here. That could be a target, whatever you like. That's down to you on how you manage your trades and what you're looking for in terms of risk reward, etc., right? But nonetheless, you would have had a good trade, right? And if you missed that, it gives you another opportunity right here where you can jump in again. And look, once it's, when they get respected to the T, right? Even if you entered blindlessly, your max drawdown on NQ would have been 14 points. Next to nothing, right? And your TP would be, again, where you want to target, but hundreds of points, okay? So really, really precision kind of entries you can get with this method, right? So again, that is, but there's more of these low volume nodes. So where's the next one where you see a dip in volume, okay? And I'm going to draw it out for you. The next area where you see a dip in volume is that. Again, have a look what we see here. This is a high volume node, then a low volume node, and then a high volume node, right? You just want to see a lower volume node sandwiched between two heavier volume nodes. That's all you're looking for, okay? So this area now became the next low volume node. Now granted, it's not as good as this one, or it's not as clean as some of the others, because although this is a lower volume node than this one and this one, it's still relatively a high volume node. Does that make sense? But it would still be something I would mark out. I just wouldn't put as much weight to it. So in this scenario, it rejected a little bit, and then it did break through, but then it also gapped up and broke through on the other side again. Okay, so it kind of failed, and it never really, it did it here again, pushed down, and then here again. It kind of held, but it wasn't the best area. It's something I wouldn't really put that much weight to it. I'll mark it out, but I wouldn't put that much weight to it, just because it is still quite a heavy volume node, even though it's lower. So let's look again on another part of the chart, and you can do this on any time frame essentially, right? Okay, let's go somewhere a bit more recent. Okay, so we had a push up here, for example, right? We had a push up from here to here. Cool. Let's mark out all of the low volume nodes that are trapped. I like to call them gaps in volume. So there's one right at the top here. Again, it's not great, right? It's not something I put too much weight onto it, but I would mark it out regardless. There's one here, again, bit better, but still not super nice. There's another one here. This one's really not that great in terms of how it looks. And then there's one that's actually very nice at the bottom here. Okay. So these are the 4 zones where I'm looking to trade and bounce off of. Okay. I'm looking essentially for the market, you know, to kind of come back, bounce off, break through, do this, do that, this, you know, bounce, basically play ping pong between these levels, right? That's all I'm looking for. So let's see now, once we push back down, what's happened. Okay, so the first zone does not get respected in terms of a rejection, but it does break through. Comes back on the other side and continues down. Takes a bit of a while. It does it again here, and then eventually here it really moves down, right? The second zone actually gets respected very nicely, and we trade back up into this zone. Okay, so awesome, another cool trade. Then this is obviously news-based. You can just tell, you know, how dramatic the candles are. This is obviously news-based. It blows through, but then it holds at this bottom zone, right? Holds here and rejects and then blows through this one. And you can just about see how when it does blow through, it comes back and then continues, right? And then it gets to this zone again and it does reject for a bit, but it does eventually break through. So you've got lots of ample opportunity for scalping here, right? And then we kind of just trade through. Now, whenever you see a zone just start get traded through like this is when you probably want to just get rid of it, right? I wouldn't put much weight on this zone anymore, just because it's being traded through easily, okay? And then it comes back down, back into this zone, trades up. And remember, at this point, you would no longer want this zone on your chart, okay? So this zone can pretty much be removed. And then we gap up, well, we gap down on the weekend and actually open in this zone. And you can just see it playing ping pong, right? Just see it playing ping pong. It goes to this zone, and it goes back to this one, comes. And now we're starting to trade through this zone, okay? It's not anymore in any way being respected. We probably don't really want to be putting that on our charts anymore and leave it. But then eventually it touches the very bottom zone, the best of them all, just in terms of look at how small that volume is, right? This is clearly the best zone out of all of them, okay? So this would be like the really, really nice one you want to wait for, okay? But you can absolutely scalp between these zones, right? And then when it eventually gets to the really nice one, oh, look at that reaction. What an absolute crazy reaction. Boom, 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 up and up. And it really, you know, just keeps pushing through. And yeah, so around this area here, you would want to delete this zone. This zone is no longer in play. And now you only have two zones that are left respected, you know, after all the other ones. And you can still continue to trade these ones as you do. So from here, you know, you can go all the way up, take your profit at this zone, potentially short the market if you wanted, at least for a scalp. And then when we broke through, you're waiting for it to come back on the other side and then continue up, right? And that's exactly what we had again, okay? And it did it a lot, did it really nicely here. Just broke through, came back, respected it, and then drifted its way up. So that is how I use the volume profile, okay? I'm always measuring it from legs, from pushes up and push up or push down, depending on the market, right? If we pushed up, then I'm measuring it from, you know, the bottom to the top. If we push down, I'm measuring it from the top to bottom, okay? And we got another nice push up here, okay? So we'll do one more from here to here. And I believe I've already marked out this one. And there's really only, you know, there's one that's really nice. And I'll give you a few seconds to pinpoint which one is the one that's I'm really eyeing up here. Okay? Which one looks the most lowest volume, but it's trapped between heavier volume. Okay? So we got one at the top here, but again, like I said earlier, This one is still quite a heavy volume node. Not really something, I probably wouldn't even mark this one out on the chart because it really is just a tiny small drop in volume. Then we've got another one here, but again, it's only a small drop in volume, right? But then we got this one. Look at this drop from here, all that, a massive gap in volume, and then a bit more. And then we got another half decent one. It's definitely one I would want to keep on the chart right there. So the main two I would really, really keep my eye on, especially this one. This one is phenomenal. Okay. Lovely, lovely zone because it's a real nice drop off in volume. And one at the bottom here as well, which is also half decent. And just for this video, I'm going to also, you know, mark out the other ones which are not that good. Okay, so these ones aren't that good. I probably wouldn't want to trade them too much, right? And as you can see, the one that is really nice, oh, that really reacted beautifully to the market. And yeah, well, I mean, we've never actually come back, right? And then we had this push up here, so we can do a volume from here to here, and then we can mark out the next zone that's right below it. I mean, right above it, right there, and then that's that area. So you can always, you know, find these areas just by using the volume profile. Okay, so that is how I use the volume profile. And once I'm in, so for example, we had this push up, right? So I can do a volume profile. Now we haven't had really a retracement yet. I mean, this could be the beginning of a retracement, but I would do, you know, a volume profile from the bottom to the top. And I would look for, I mean, there's a beautiful zone right there, and there's a really nice one there, and there's a really nice one there. So we got three really nice zones right off the bat on this little push up that we can definitely take scalps off. Okay, and then there's a really nice one there. And they're all very well defined, and then a really nice one there. Okay, so we haven't really had the chance to test these two bottom ones, but we did, you know, on this pullback and this pullback here, we did test these two. So you could have had, again, a nice long here, another nice long here. And, you know, if the market starts coming back and it breaks through the zone, then you want to look to short to this zone, and then definitely look to buy on this one and get out here, and so forth, right? Now, once we actually get to those areas, I will explain in another video about the footprint. I will look at the actual data that I'm seeing. So I'm going to switch over to the footprint and just do the most recent one that pushed up here, right? Let's see if we can actually see something interesting in the footprint, okay? So this is the delta footprint and all the contracts being traded. And I'm just going to make these each row a little bit bigger so we can see it with a bit more clarity. Okay, look at this. I want you to look at the numbers really quickly of the delta. So this is the difference between the buyers and sellers, okay? How many buy contracts, how many sell contracts, subtracted each other, and that's the difference, right? Look at the general numbers, 54, 14, 46, 10, 29, 72. Nothing really that massive, right? Okay, all relatively smaller numbers. Now I want you to see what happens when we get into that zone, okay? What do we get into in that zone? The numbers are starting to increase, 86, 101, 134, right? 114, okay? And we're seeing buyers coming in quite heavy now, okay? And again, bigger, heavier buyers. Now look at that. This is definitely a great entry, right? Lots of sellers, 212 right at the bottom, okay? And we instantly started trading above them. Buyers came in aggressive. These sellers are trapped. These sellers are trapped. These sellers are trapped. These sellers are trapped. Lots of sell volume coming in, all right, in this area, but it's not pushing down. They are unable to push the market down. Why is that? Why is there so much sell volume, aggressive sellers selling this market, but it's not dropping? Because, and I explained this in another video about supply and demand and the order book, etc. It's because right here is an iceberg, okay? And essentially, there are buy limit orders, okay, in this region, and it's going to be, you know, a bigger region. Lots of buy limit orders in the book, that whenever an aggressive seller comes in, it gets matched up with a buy limit, but it's such a big order. It's an iceberg order, right? You don't really see it in the book because they only show the tip of the order, right? But every time, you know, let's say 20 contracts get executed from the buy limits get executed, instantly it replenishes another 20, and then another 20, and another 20, and another 20. So the real size of the order could be, you know, hundreds, thousands of contracts, who knows, right? But that's why prices aren't able to get below, okay? Because there's a buyer, institutional buyer, absorbing all these aggressive sellers, okay? And once their order is filled, okay, and, you know, they're now in the market with, let's say, 1,000 contracts, you know, they've bought down here, okay? They start entering a bit aggressively to try and get this market up, right? So they start adding a bit of size, getting, you know, try get this market pushed up into their favor, ready so they can sell it higher up at a better price, right? And that is exactly what I'm looking for. When we get to these areas, I want to see absorption. I want to see something, you know, indicating this isn't going to just break right down and go through. I'm seeing absorption here. The sellers are coming in aggressively. They're unable to break below it. Okay, buyers are starting to come in. There's interest from the buyers aggressively as well, right? I'm happy enough to enter already, you know, the moment I see, especially here. I mean, here is absolutely put on another contract if you're not in yet, you know, here. But even lower down, I would already enter probably 1 or 2 contracts here. And then as we start trading above them and aggressive buyers come in, I'll add another contract, you know, and yeah. So you want to scale in a bit, but that's, again, entirely up to you how you define your risk, and that's a whole nother method, you know. But so combine it with the footprint, and you're gonna have a much better success rate, because you're less likely to be stopped out, because you're not just entering blindlessly the moment we get to one of these areas. Which, you know, you can do. It is a strategy, you can do that, but you're going to have a much better success rate if you just set an alert at these areas, right? You can see I have an alert set quite a bit before it, because I'm waiting. If price gets to this area here, right, I want to be I want to be potentially buying. Okay, there's going to be a really nice buy in this area most likely if the footprint confirms it. So I've already got an alert set in that area, right? Waiting, hoping that, you know, whenever price does get down there, might take a while, okay, but that's going to be one where I'm going to add a bit of size to it and make a lot of money, you know, because these areas are really, really good. So yeah, combine it with the footprint and you get an incredible success rate. So this is obviously the 15-minute chart. This shows, you know, more the longer term moves, but if you drop down even to like the 1 minute, you can make it work on the 1 minute, right? So I'm just gonna, for example, we had this push up 1 minute chart. If you're like a true scalper and you want to do it scalp, I have the longer term areas like 15 minute, but I also like to do it on the 1 minute, right? But on the 1 minute, I want to only pick the best ones, right? I don't want to just pick all of them because it's going to be less reliable. But like this one is the best one on the 1 minute, right? I want to pick that area. Now, we didn't quite get there yet, which is a shame, because I would have loved to, you know, see what happens when we get there. But yeah, you know, if we do get there, I can imagine there's definitely going to be some bullish move. But let's find another, you know, move down. Even if you're, you know, as a scalper on the 1 minute, we had this nice push down, right? We're just going to measure this push down. Okay, where is a really nice one? The best lowest volume node that's trapped? Well, right there. That's the lowest volume node trapped between 2 heavier ones, right? So this is my area that I'm going to mark out, right, on the 1 minute. Now, as we start trading above, what do you think I'm looking for? I'm looking to short the market as we get to this area, right? Alongside having some kind of confirmation on the footprint. So I'll switch over to the footprint. As we get there, my alert's set. And I'm just going to make the row size a bit smaller so I can see a bit more detail, right? And I want to see what's happening. Again, now it's not as clear on this one, sadly, but a lot of the footprint is watching it in real time, okay? So you can see bigger numbers, 73, 63, right? And they're struggling to get it up, and then, you know, a bit of aggression comes in from the sellers, but it's not perfect. You know, we have got bigger numbers here as well, but they did manage to get it up. It's not a perfect example, but what is very important when you're trading the footprint is seeing it live. Like this closed at 63, right? But this could have jumped all the way up to, you know, 150, right? This could have been 150 delta to the buyers, and then lots of sellers came in, right, and dropped that back down to 63. So you'll want to watch it in real time. What, you know, how the numbers are changing in real time will also give you an indicator, an indication whether, you know, sellers are coming in aggressively, if buyers are struggling and getting absorbed. What it actually closes on can be a little bit deceiving, okay, because you're not seeing how that developed in real time, okay. So, but yeah, I would absolutely wanting to be short in that area. Now, of course, since it's the 1 minute chart, I'm not looking for a massive extension down, you know, to lows or whatever. But, you know, even if you take, for example, if we jumped in here, our stop is above that area. Even if we just target the bottom of this range, right? It's still a good risk reward. It's 36 points, right? As a scalper, that's decent. That's all you need, right? And look how quick it does it. There's no real hesitation, okay? It's just pretty much every candle is bearish, bearish, bearish. A little bit of a pullback, but nothing too crazy, right? Bearish, 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 bearish. Maybe, you know, if you're reading the order flow in real time, as you start, you know, if we start breaking above, you might want to be looking at, okay, maybe I'll get out here, because it got very close. But then, you know, it does make it down. But again, it's entirely up to you of how cautious you want to be in terms of taking your profit and reading the order flow live. But essentially, that is, you know, the way to do it. And now here's slightly annoying that it didn't quite work out. I mean, we do blow right through it, right? Okay. And it does kind of come back, but it doesn't quite get there. Okay, and then it shoots off. That can happen sometimes. And sometimes you'll see, you know, price will get very close to that area and then, unfortunately, reject before it actually touches the area properly. So there are missed opportunities as well, okay? But let's see what happens in this area on the footprint real quick, right? See if we can see something. Now look at this, right? To be fair, look at all this volume coming in from the buyers, right? Now, there was a rejection. You can see that volume, and they struggled to push it up. So I probably, yes, would have entered here with like one contract, right? In anticipation that sellers are going to come in quite heavy and push this market down, right? And if the sellers did come in heavy and were effective and actually were able to push the market down, I would add more size to that order, right? But very quickly, the sellers also weren't very effective. They did come in, but they just, look, they couldn't push it really down, right? It instantly kind of rejected up. That would be my first sign of, this might not work out. And then look at just the heavy buy volume that came in and was able to go through. You probably don't want to be selling, right? And they were actually able to push the market up, right, with all that volume. So they broke through that iceberg order, right? And the iceberg collapsed, essentially. Now, if you look very carefully on the 1 minute, technically it did break through. Didn't really see it earlier. You may have missed it because it happened so quick, but it, you know, we did break through. We came back on the other side and we just about touched it and then shot off. So technically, again, you're looking at the 1 minute, right? So you've got to be quick. It did actually do it and then continued up. So I'm going to leave it at that, but that's basically how I trade, right? That's how I mark out my levels. I'm looking for lower volume nodes. Remember, the volume profile is more measurement of time than it is volume. When you understand that, it becomes a bit more clear. Now, I'm not saying the point of control or the heavy, you know, volume areas like the point of control is something to just ignore. I do like to have the point of control on my chart as well, of course, and be very aware of it, because generally speaking, the point of control, the price will start consolidating around the point of control, okay? And the thing is, the point of control I would use a lot more for like take profit, because there's a good chance when we get to the point of control of an area, price will stop, or at least consolidate, and can potentially reverse as well and create a pullback, etc. So generally, the point of control, I want to be a bit wary and potentially get out of the market when we get there. But that's pretty much it. So guys, let me know in the comments down below if you want, what kind of videos you want, what topics you want me to cover. I'm going to be making many more. I do apologize for taking a bit of time and getting these videos out, but that's basically the volume profile breakdown. I'm going to be doing a footprint breakdown, a really in-depth footprint, and show you some certain patterns on the footprint to really look out for that have really, really high probabilities of working out. So apart from that, join me on the lives every day. I trade Monday to Friday, New York Open, 9:30 Eastern Standard Time every single day. So do join me for that. Tune in, pop in, say hello. It's always a good time. But apart from that, guys, thank you for watching, and I'll see you again very soon. Take care. Bye-bye.